Hello everyone. In this video, we're going to check the 2008 crisis lesson with 1999 crisis. You will not find a lot of video on this topic, and I have found some inner information about this, some visibility on the chart, and the same I want to share with you. In 1999, the story was pretty bullish. You may see in the chart that from early 1990s, stock market was keep going up. The story has changed in 1999, or you may say early 2000. The reason was not one, but many. One of the key reasons was that any company which want to have their own website was getting a lot of fame in stock market. You may see the chart here that after 1995, the market just have a very bullish chart. This story was not always right. The reason of the real internet bubble has started because the good companies like Microsoft or Apple were pretty new, but they're good companies. But there are a lot of companies which are not so good. Also, in the meantime, the market has given a lot of values at a very high PE to these technology stocks, which they are not been able to perform or have not been able to prove themselves in that time. Maybe the hype was big, maybe the world was on its early stage of technology, and they believe that it will going to become a big name company in future. But still, it was a bit early than when it should happen. The effect of it was visible after 1999, and you may also see on the chart that after this period, there was a double top made on the top. In this video, I'm also going to add my perspective on double top and double bottom with morning star or evening star, creating on an weekly or monthly chart. Whenever there's an evening star creating on a weekly or a monthly chart with double top, that's mean that the bigger trend is changing. The same we can see here. There's a small double top kind pattern made, and thereafter the market started falling down, and it happened till 2003. This chart does not say a lot by itself, but it at least shows a perspective that there's a big correction happened after a certain time when the market was bullish. And also in 2002 and 2003, you may see there's a triple bottom created, which is more or less saying that the pattern was changing. The trend itself from downtrend, it started becoming slightly bullish. But those people who have stuck in this particular bull run, what happened to them? You might not know, but there are a lot of big companies where the bigger investors who are still bullish have purchased their stocks and they were kind of trapped. Now, what can be done? This is a question that no one has asked. Those who are trapped in 1999, what they can do? One of the way is that they have to wait for the another bull run, or they have to book losses. Booking loss is one kind of thing. Not everyone is comfortable of doing it. But still, if you will have a bigger bucket where you have put a lot of stock on technology, then maybe for next 4-5 years you have no exit, and hence you're stuck. The effect was actually visible on 2008. From 2003, when the bull run again started, you may see here that the stock actually has, the S&P 500 actually has failed till 800, and thereafter it has gone also till 1500, which is almost like double. Well, in a period of 4-5 years, if an index like S&P 500 can double, it will still be counted as a very big bull market, which is almost like double. But those who have stuck from 1999, they were also looking for a route to skip. Also, There are many more people who have made a lot of profits from 2003 bull run. And throughout the world, the story of bull market has started. A lot of people who are making money on the market, they were not sure about it, like why it's going up. Because fundamentally, not a lot of things has been changed. But over the chart, after 2007, there was signals started coming up that this bull actually has made a top. And we may see here too that it again has made it started making a double top. Well, there are many more reasons why it has been making a top. There are more fundamental reasons about it. But being talking about a chart, it was pretty visible from that top that it started failing. And it was not only started failing, it really started dropping with a very strong pace, which it has not done in 1999. But still there's a pattern. You may see here that the bottom is more or less near to 2003 bottom. The decline was unpredicted by many, but those who might have worked on the chart, they may know the answer, that it knows till when it can go up. To sum up both the story together, you may see here that the top of 1999 and the top of 2008 are same. Same time, the bottom is also somewhat less similar. What could have been done by any person to understood this is that on a monthly chart or on a weekly chart, if a bigger trend is about to change from the 200 DMA, then they should consider that as a change in the bigger bull or a bigger bear run. It happened in 2003 that on a monthly chart, it looks like it has taken support on 200. When that happened, you may also see that the RSI was about 30. On a monthly chart, if an RSI is 30 or below 30, then it's the time when you can say it has hit the bottom. Well, with that logic, we can say that also the same has happened in 2008. And those people who have kind of again stuck on 2008, well, for them, they have to again wait for a longer period, maybe another 5 years. To see this, we must go to TradingView. TradingView is one of the best charting software over internet where we can see this happening. On my chart, on the right hand side is a monthly chart, on the left side is a weekly chart. If I make it a bit smaller, you may see here that the bull run, which has kind of just going up and up and up, has gone till 15,000 plus, 1500 plus, and the bottom it's about 750. The same has been done in the period 2007 or 8, where the top has been made of about 1500, and again the bottom is made on somewhere 800. Well, the support that it has taken is on the monthly 200, and the bottom that it has made on 2008 is at the bottom of 1999. We can also see here that the RSI is more or less the same at the bottom. The RSI on the top make no sense, so we never discuss about the top RSI. Well, do you think it's a coincidence? I don't think so. Whenever on a monthly chart there is a change or there is a difference of this much, we can always say that there must be a concrete reason of this development. It's not always the case. In 1999 and 2008, both the time it was a false breakout. Hence, after a certain time, it need to come down. On the chart, it was visible. We can make a lot of conclusive evidence out of this chart and may say that, okay, maybe this can happen again in future. Or you may say this is just a coincidence, this should not happen ever again. But there is no denial on the fact that if on a weekly or a monthly chart is a double top or a double bottom, then we must see it one more time and see, is it really happening? My ages. Does it happen maybe only once, or it can happen again? Conclusion from my side is, whenever you are looking for a bigger investment, always see a monthly and a weekly chart. Monthly chart might not be look interesting, but if it is near 200 EMA, always expect some big thing to happen. The same is also with weekly chart, mostly for the stocks. If it is going below 200 EMA, if I am there, I would have make an exit and only re-enter if it is above 200 EMA. And that's I'm talking about monthly chart. We can see that the greed in early 90s or the greed after 2003 were always up. And the fear after 1999, the fear in 2008 were also high. In the end, the stocks goes up and goes down just because of greed and fear. Whenever we see this going up, we get greedy. When it started falling, we fear. But if we would see it in a different way, like we discussed in this video, then maybe the results are different. Well, that's all I have in this video. Thank you so much. Have a nice day.